Oh, excellent, guys. Let me know if you can hear me. I was having a little bit of trouble with the YouTube Live software. It was taking a while. Looks like we're getting started about 1 minute late here. Let me see here. Great. Anyway, today I kind of want to, let me know if you guys can hear me, though. I'm using a different microphone than I was last time. Chat got quiet all of a sudden. All right, let me see here. Okay, excellent. Daniel Connolly says, sounds good. So I guess that means you guys can hear me. So I know last week I kind of talked about how positive I was on, that the downturn that we're seeing is coming to an end, and I'm still that way. I said that really without even thinking about what the passage of the stimulus is going to do for the stock market. And I know you have to consider that, but it's not something that I really want to think about right now at this point. There are a lot of other positive things going on in the economy besides just the second half of the Stimulus Act and the fact that lots of people are going to be getting a check. And I wanted to address some of your concerns today. I know that a lot of, I have sort of, pretty decent experience as a fixed income trader or as a bond trader, and as someone who did a lot of bond trades for my clients. This was some time ago because that part of the market really hasn't been as active in the last decade or so for the general public. But if you have questions about that, feel free to ask questions about the bond market as well. I know I've seen a few of those this week, but I'm looking forward to hearing what you guys have to say, and I'll let you know what I think. Just kind of fire away, guys. All right. Kingston James says airline and cruise stocks. This is something that I've been over a couple of times in live casts. Airline and cruise stocks are going to be great recovery plays. However, the airline industry, like I said, as a whole, the airline industry is not profitable. You have a couple of bright spots in there. Like Southwest Airlines that manages to eke out a profit, but they mostly do that by being really good at hedging the cost of fuel, meaning they're very good options traders, commodities traders, as well as running airline. And most other airlines don't really do all that well. But like I said, if you look at the airline industry as a whole, there's a reason why most other countries have a sort of semi-nationalized airline industry where it's public, it's private enterprise supported with public money. It's because the airline industry isn't profitable. Just the way it's set up to enable, regular people like you and me, the ability to travel relatively cheaply. It's not set up to really be profitable. All right, questions. When it comes to cruise lines, man, cruise lines is something that I've never really been interested in investing in. It's a great dividend play when they're paying dividends. Right now, I would assume that most of them are not paying dividends. It could be a good recovery play, but beyond 2-3 years out, I'm not sure I would hold on to those stocks anymore. So I hope, Nicholas Morin says, I just hope that NEO comes back to 60 before the end of May. Is there a particular reason why you want that to come back before the end of May? And I'm saying that kind of half in jest here. And I'm going to tell you, I'll tell you a little bit about my story here with a couple of stocks. But that's one of the things you have to realize is that market's going to remain irrational longer than a lot of people have patience for. And there's going to be a lot of people bailing out of stocks. And I think there's going to be a lot of opportunity between now and May to pick up more. Because I think we kind of hit bottom last week, probably Friday morning, in terms of the tech crash. But I do think we're going to bounce off of that bottom a couple more times before the end of May, early June. And I think by the end of June, I think we're going to be rocking and rolling in terms of the stock market. So so in terms of NEO here, nothing has changed about NEO in the last last month or so. We've seen the price decline by 40 or 50% or so just in the last 6 weeks, 7 weeks. But nothing fundamentally has changed for the negative with those companies. It's just that we've seen a rotation out of some higher risk stocks into some things that are a little bit less risky at this time. We're seeing a lot of money flow into other portions of the stock market that investors, they want to be there to begin with, right? It used to be, a long time ago, I worked for a bank brokerage, and anytime CDs went up to about 5%, you basically couldn't get anyone to do any investment business, right? Because most of the people at that bank, what they really wanted to own was something risk-free that paid you money. A lot of investors, what they really want to own is something that's old, boring, stodgy, and they think they can make 7% a year. I know that sounds really odd coming, when people watching my channel. I know since I did that survey, and I realized that 80% of you have been investing for less than 5 years. I realize now that a lot of you just don't have the experience that I kind of assumed that you did. So there's this huge population of people out there that really don't want to take any risks at all in stocks. They've been forced to be in stocks because we haven't had interest rates approaching anything reasonable now for more than a decade. And a lot of the stocks that they traditionally relied on to pay dividends have cut dividends in the last couple of years too. So they've been forced to take more and more risk. As the economy improves and other sectors of the economy start to do better, in relationship to how tech has done, we're going to see a rotation out of higher risk stocks into lower risk stocks, into the Johnson & Johnsons, into the 3Ms, into the Procter and Gamble's and that sort of thing. It's gonna. I don't think it's gonna happen all at once, but I do think will happen. That's going to happen. So, Kathy Wood says this is the time to invest in the disruptive sectors like EV. I would agree with that. Love to hear your thoughts on Lucid lying to stockholders. So I'm not sure what exactly you're referring to, Adam. When does that refer to the size of the float or the size of the initial public offering, like how many shares are going to be issuing, or is it in relation to some technology? I'm not really sure about that. So Doug B says, I'm just holding some corporates with yield and maturity about 4.5 and maturing in 28-29 with no plans to move that, keeping that as insurance. Hey, Doug, I would assume that if you have yield and maturity at 4.5%, with and maturing in 8 or 9 years, or seven or 8 years, then you must have bought those quite some time ago, because that's not really been available on anything other than junk bonds in junk status bonds rather in the last maybe 5 years or so. But anyway, it would be a good idea to hang on to those if you're confident about those companies. So Sean Marovich says Tilray opinion. So my opinion on weed stocks is in many ways a lot like it is with electric vehicle stocks, but it's a lot harder, I think, to pick winners in weed stocks. It's a technological revolution, not in the same way that actually this is something that people haven't thought of yet, or at least they haven't thought of when I'm talking to them. There is going to be a technological revolution in how we grow marijuana, right? So I did some research into marijuana when it first came out, and I started going in the direction of like looking at all these people that make these lighting systems, all these people that make these, all these different grow systems and hydroponics and all this stuff. And then, a week into this and then this obsession rather, I just kind of throw all that out the window because I suddenly realized once this is truly deregulated and once it's really legal, because it will be really legal at some point, the ways and methods that we grow marijuana now are probably going to completely change. There's going to be a technological revolution in that too. Like, the idea of hydroponics in marijuana grew up because it was dangerous to grow it outside and get caught, right? A lot of the scientific advancement that was made in the growth of this crop was made because of that ever-present threat of law enforcement. Well, that's going to be gone at some point, and once that's gone, we can't predict how people are going to produce. We can't really predict how people are going to produce marijuana. So I think it's going to be very, very hard to pick a winner in weed, and I would rather buy an ETF that focuses on cannabis. I know it's probably more proper to call it cannabis right now. It's still weed to me, though. I think I think you could probably do fairly well picking winners from the EV sector. I think it's going to be harder than a lot of people think. I think it's going to be almost impossible to pick winners from the weed sector. Just like, Elon Musk came out with a tweet, I think a couple of days ago, saying that in the last 100 years, there's two auto manufacturers that haven't gone out of business, Tesla and Ford. I think we're probably looking at something like that in weed stocks here. So. See, Fresh Aquariums, I saw you comment earlier, so I'm going to address that now. Not going to lie, pretty shaken in short-term EVs. It's weird to me why it's such a sell-off in such a strong future sector. Okay, so So I'm going to assume that you're not a long-time investor in Tesla. So I was an early investor in Tesla, and I was an early investor in a couple of other stocks that have done really, really well. And I could say that you could probably take any 1 year. If I kind of like discount my entire like 10-year experience here, almost 10-year experience now owning Tesla. If I look at any 1 year, in every single year out of those 10 years that I own Tesla, I probably thought about selling it because they had these giant sell-offs. It would go down in value because of something that Elon Musk said or something that Elon Musk tweeted. There would be a short attack on it. And I know this sounds ludicrous now. We watched, shorts lose billions and billions of dollars on Tesla, but at one point they made billions and billions and billions of dollars on Tesla. And people didn't have the faith in Tesla. People didn't understand the promise of electric vehicles. Not necessarily the promise of electric vehicles, but how quickly the price of batteries was declining to make electric vehicles competitive with internal combustion engines. People didn't really understand that, 10 years ago. They didn't understand that 5 years ago. So you saw the same sort of volatility with Tesla that you're seeing right now with electric vehicles. But you have to go back and kind of look at this with any sort of technological revolution. You see the same sort of volatility in all technological revolutions. As people invest in certain companies a little bit too early, they jump on the bandwagon a little bit too late with certain other companies. People lose faith and leave the market. They find better opportunities for a minute here, or people don't get the sort of short-term rush that they think they should be getting, and they get out. But I can tell you that you probably know a lot of people who've gotten wealthy from Tesla, right? You probably know a lot of people who've made quite a bit of money from Tesla. Nobody did it in a short amount of time, right? Half of you guys that are invested in NEO have only been invested in NEO since this summer. And I'm an early investor in NEO too, and I can tell you that I sat underwater for like a year on pretty well. It wasn't that large of an investment because I bought it so low, but I was underwater for almost a year on that. And that's going to happen over and over and over. So I'm actually, Fresh Corn says, absolutely, I'm applying what I learned trading Tesla 4 or 5 years ago to XPAP now. It just hurts because I'm super silent into it. Yes, but that's exactly it. Like, there's a lot of times when I came close to losing faith in Tesla just because, and one of those times is when they were single digit weeks away from bankruptcy, and it looked apparent to me, but no one was talking about it in the media that Tesla was about to go out of business. And I want to say this was probably around 2016, 2017. It was very, very close. And I still didn't sell. And then maybe 6 months after that, I actually, added to that position. And then when I added to that position, after I thought they were going to go out of business and then they recovered, I was still underwater on that like 100 shares that I bought for about a year and a half. So, it's the stock. So just like the stock market, in many cases, a single stock really holds on to the gains of any single day over time, right? If you guys have never seen the best 10 days of the market research, and I've talked about this a couple of times too, you should go look that up. It doesn't perfectly apply to stocks, but it does apply to a degree as well. So be careful about the full name. You might get in trouble with YouTube, sir. Okay, I don't know. Let's see here. Let me go back here. I'm going to scroll back. And let's see, Palantir. China's current aggressive military action is making anything Chinese look risky. JS. Okay. That's so China. Okay, this is going to make a lot of people pretty angry. But when it comes to when it comes to countries acting aggressively on the world stage in relation to their stock markets, nobody is more aggressive on the world stage using their military than we are. And that doesn't affect our stock market here the way people think that it does. China is not necessarily being all of that aggressive militarily as well. They have a bit of a conflict with India on the Indian border. They have a simmering conflict with Taiwan that's never really gone hot, at least hasn't for a while. They have an internal conflict in the northern part of the country. I would say that we have an equal amount of concerning conflicts ourselves, and we're kind of kidding ourselves if we don't admit that. So, Kingston James says I'm down almost 50% on Microvision. Yet Kingston, we talked about this before. I'm not really a believer in Microvision. If you look I pulled a number of Chinese electric vehicle companies that are experimenting with LiDAR right now, like 8 of them. And as far as I could tell, they were all using domestic LiDAR producers, and they weren't using anything for Microvision. So I've heard a number of people tell me, hey, Microvision's LiDAR is being used in this Chinese EV company or that Chinese EV company. And when I've gone back and looked at it, I can't find any documentation of that. That's all Reddit rumors. So I really don't see what everyone else sees in Microvision at this point. I think that the price spiked because of its peripheral attachment to the EV industry. And they don't actually have a product right now that's being used in EVs as far as I can tell. And they took advantage of that by doing a massive $50 million at the market offering, which is going to stave off bankruptcy for them. I think that they were essentially bankrupt back in May of last year when their price sort of unexpectedly took off, and they were shopping for a buyer. You know, they were shopping for a buyer for their patent portfolio. Daniel Winnick says, love your take on things. Thoughts on SoFi long term? So, Daniel, I'm not unbiased. I've invested pretty heavily in the SoFi SPAC with the IPOE. And the reason I haven't made a video on that is because I keep buying SoFi. But I think I'm done. I think I'm done right now. So I'm going to come out with a video here pretty soon on that. SoFi is one of the more... So Fintech, Kathy Wood is right that Fintech in a lot of ways is pretty misunderstood. And that SoFi is not, everyone looks at SoFi like their app is the thing that they should be concerned with. Their app has some issues right now when it comes to trades. There are certain things you can't do on it, but they're adding functionality all the time. But that's their trading app, which is the thing that most younger people are concerned with, is not the majority of their business. 83% of their business is actually their loan portfolio. And their loan portfolio, basically the loan portfolio works and the business works by cutting out the fat and cutting out some of the processing in loans and creating efficiencies there. But they're one of the only SPACs here that's looking at being profitable before the end of 2021. And they're looking at being profitable before the end of 2021. And this is not counting they just got preliminary approval for a bank charter. So the potential revenue from banking has not actually been calculated into their profit calculations at this point. So this is actually something that's additionally good. They're adding functionality. When asked what they were planning to do once they went public, their answer was they're going to go and start acquiring other companies and adding functionality to their business. So I'm pretty bullish on SoFi at this point. I like their management. I like their plans. In fact, I'm pretty bullish on fintech in general for this year. I think that in general, a recovery like this would be very good for financials. It would be very good for, if we do actually see a rise in interest rates of any sort, it's going to be good for the Wells Fargos. It's going to be good for the Bank of Americas. It's going to be good for, the Goldman Sachs. This time around, I think it's going to be a lot better for fintech. There are a lot of people now in the last decade, or decade and a half, who've endured 2 downturns from, and endured really poor treatment during those 2 downturns from banking institutions. And I think that we're all ready for a change. Everything to do with traditional banking, in my opinion, is extremely painful. Even if after they move things online, they're just not as good at it as some of these newer, more nimble companies are. And I think that, Kathy Wood keeps saying that Cash is the Cash app and that Square is going to destroy banks. I don't think it's just Square. I think there's going to be 100 new companies out there that cannibalize the traditional banking industry, and they create something new out of that. And I think this is the year of fintech. Just like last year was the year of EVs, I think this is the year of fintech. And it's not necessarily going to be some of the players that we're most familiar with. I think we're going to see new faces and new companies emerge. So let me see here. I was buying NEO before the government bailed them out during their darkest life-changing decision. Absolutely, Royce. And that was pretty much the same thing for me. That was pretty much the same thing for me. It's, if you know anything about the Chinese auto industry, is they don't really let anyone die. They give them just enough help to help them kind of limp along. Because I don't know, they see almost every vehicle company out there because they've tried for so long to break into the car industry internationally. They kind of see every automaker as some sort of national pride. And I'm actually surprised at how many companies are out there in China, Chinese vehicle makers that are actually really terrible and that are still around. I think one of the most interesting things is I was watching some other YouTuber. He posted a video from like 2007 when he was in China, and he was driving a motorcycle that he bought for $500 fresh off the factory. And it was something he had to work on daily just to get it to run from point A to point B as something brand new. We see here. Doug B says, I've supported SoFi for years through my student loan repayments. I've been very happy with them from the beginning of the term. They have just good discussion board also. Excellent. I'm glad to hear that. Would you suggest, and Demo says, would you suggest any potential value electric utilities also benefit? Well, I think that every utility is going to benefit from EV and charging infrastructure and demand. I think that almost every utility is going to do two things here in the future. They're going to be adding renewable power generation. They're going to be adding wind. They're going to be adding solar. They're going to be adding all of those things. But the other thing they're going to be adding is EV charging. And like I said before, the technological barrier to entry for EV charging is very, very low. That's something I don't necessarily. I haven't been able to pick a winner in that industry just because there's nobody special. The people that have market share now, like I said, there's no barrier to entry into that. Some larger, well-financed electrical component producers can come right in there and just push them out of the market. But I do think that charging is going to get very, very difficult because of that. I think it's going to be a destructive competition there. Kingston James says, what do I think about Walmart long term? Walmart is a stock that doesn't cross my mind very often. It's something that I only own through an ETF because it's one of those large S&P 500 stocks. Well, I mean, Tesla is too, but I own that as an individual stock. But, Walmart, I assume that from now until the day I die, it's going to average about 7.65% annually, roughly 1.9% dividend and the rest of that in capital appreciation. And they're going to continually expand their business until then. That's kind of the stage of development that they're in at this point. Some of those years are going to be, positive 30%. Some of those years are going to be negative 20%. But I think over time, they'll probably average 7.5% to 8%. So does it make sense to buy Tesla on margin 550 to 590 this week and then sell the same shares I'm holding short term, knowing on a plan long? Let's see. Does it make sense to buy Tesla on margin this week and sell the same shares I'm holding short term? It could. So I have to be careful about actually making recommendations to buy or sell a security. I can't do that via YouTube channel because I am, and people who do give those recommendations shouldn't do that. But because I'm a licensed professional and I'm a financial planner, I can't really give you a recommendation. It's not a terrible strategy out there. The problem is you created something. I mean, that's not a problem. Rather, it just depends on when you dispose of them. If you dispose of them at the wrong time, though, you may actually be creating a wash sale, or you may actually be creating something called got the name of just a constructive sale. So be very careful about the timing of when you're going to sell those, Ken. Okay. What are your thoughts on the telehealth space? So I did a review recently on Teladoc, and Teladoc is something that I don't own as an individual holding. I just have it through an ETF. It's something, though, that I wish that I did buy that through as an individual holding. I really wish that I do. I think that, especially in terms of mental health, I think that Teladoc has a huge future, or somebody like them has a huge future. I have been investigating sort of like the money that we spend on mental health right now, and what that's going to look like in the future. And I had no idea that something like 25% of adult Americans are mentally ill to some degree, or have some sort of basically need help at some point. And a lot of them actually feel more comfortable doing this remotely than actually going in and seeing a doctor. They're more comfortable talking about this from the privacy of their own home. And I was reading a couple of research papers on that. And these researchers seem to think that it's not just that it's a growing industry and people are going to make a lot of money in it. They think it's actually better for the practice to do a certain amount of mental health screenings from home. And I don't know if I agree with that or not. I thought that was very interesting research. So how do you value a company like XPEV? Currently, it's at 9.5 times 2021 sales estimate. So I bought heavy at 47, down to 35, realizing my values. Okay, so with a company like this, it's actually I just did this the other day, and I wish that I had my charts and all that stuff handy to do on a live stream. Is that something you guys would want to see in a live stream? Would you want me to bring up charts and things like that and show you guys like how I value things? The formulas that I use. I don't know if that's something that you would like to see. It's kind of stuff that I do all the time, but that's not necessarily how I would do that. There's something called price to earnings growth ratio, and that's more what I would use rather than just multiplying it by its 2021 sales. Even that, to a degree, is a little bit difficult to do, just because this is so early. Let's remember, I think they only produced like 40,000 vehicles last year or something like that. This is a really small company at this point. They're already, by traditional methods, already way overvalued. You're betting on the growth of the future, and you're betting on their ability to exponentially expand their production capacity, which they really look like they're going to be able to do that. That's the one thing is that that's the one thing that's been Tesla's genius. They've been able to figure out how to make the machines that make the machines and make those a reality in a reasonable amount of time and expand capacity. And I think that XPeng is basically just copying them and doing exactly what they're going to. Which the point was made to me is that you don't have to be 100% original to really make it. Sometimes you have to be just good enough, to provide an alternative to a client who just wants something different. And there's a lot of us out there. We see here. How do you feel about ARK? I love Kathy, but the media always seems to try and make us emotional. 3 weeks ago, they made articles about how she's going to be woman of the century, and last week she's a scammer. So I absolutely love ARK Invest, and I love Kathy Wood. I don't agree with her on everything. Like I'm not sold on her nano dimension. And if you notice, whenever she talks about nano dimension, she doesn't actually make a thesis for them. She's not really making a case other than saying she likes the management, they have great plans and all this. Maybe it's because she doesn't understand the technology of everything she invests in, and I wouldn't expect her to. Just like we don't understand everything about the technologies that we invest in either. But as I said, I really respect everything she has to say. I don't always agree with her, and I think that her thesis, though not her thesis, rather, but her adoption of Clay Christensen's model of disruptive innovation and turning that into an investment model is something that's really unique. It really hadn't been done before her, and it's paid off. But let's remember, this is a short-term payoff. It's really been the last 5 years that she's been the queen of ETFs, the queen of investing. So this, you could look at this and say, this is, if you're investing in Kathy Wood right now, you're dumping money into her ETFs. You could say that this is chasing returns at its finest, right? And that's one of the things you're always warned against as a financial planner, and financial planners are always warning their clients, hey, don't chase returns from the best mutual fund managers. There's plenty of evidence out there that once someone consistently outperforms the market for 5 years or so, they won't do it again. There's actually really good evidence of that. So, and I've done a couple of videos on this where I tried to explain this in a manner that I thought was digestible, and people didn't like the videos. I either didn't explain it very well or I was boring. I don't know. But essentially, roughly 88% of managed mutual funds don't outperform their index in any given year. 88%, right? And even if they did, say that 12% that did outperform their index over a period of 5 or any 1 year, even if they did it over, and I saw this statistic, like literally for over 5 years or so, the statistics are relatively the same. About 12% of mutual fund managers are going to outperform the index over 5 years. Once they've outperformed the index over 5 years, if you look at that SPIVA persistence report, if you are in, and this is something that's put out by the S&P, if you're in that top half of your peers in any 5 year period, in the next 5 year period, there's basically a 62% chance that you're going to be in the bottom half of your peer group. So here's the problem with that. If you look at the top half of the peer group, half the people in the top half of the peer group did not outperform the index. And there's still a 62% chance that they're going to be at the bottom half of their peer group in that next 5-year period. So chasing returns is always kind of a bad idea. And there have been a couple of guys, Bill Miller, Peter Lynch, and a couple of other big money managers who managed really long stretches of outperforming the market. But even they kind of like dropped off at some point. Like Bill Miller had a 20-year stretch where he had basically 20-year returns every year. And then once that research came out, 20 years, 20% returns, he basically never outperformed the market again. And there's been a couple of cases just like that. So Alonzo Martin says, I just bought 100,000 on Bitcoin. What do you think? I think you're very brave, Alonzo. So I have a really small amount of Bitcoin. I'm just not convinced right now that it's actually an investment asset. And I know one person who literally put his entire life savings in Bitcoin. I mean, like borrowed money on his house, and this is back when it was $1,000 per coin, and he ended up selling it at like $19,000 or $20,000 or something like that. He did very, very well, but even he admits that for the most part, it was just luck at this point. I want to see real application of Bitcoin and real adoption by the mainstream before I'm really excited about it. So, what's your thought on a Tesla entry point? I know you can't give a number. Thanks, Nathan. So basically, Tesla has never been, in my experience, Tesla has never been beyond a point where it's unreasonable to enter into Tesla. Even at its high at $900 a share a couple of weeks ago, the only reason I didn't buy is because I didn't have any money. Pretty much every time I get a check, I buy a share of Tesla. And the reason I do that is because I'm looking pretty far into the future, 10, 20 years down in the future is what I'm looking at. And when I look at the growth of their energy storage business, I think their energy, not just Tesla Solar, but I think their energy storage business will be just as large as their auto vehicle sales in terms of dollars here in the next 10 years. I honestly believe that. If you look at their energy storage business right now, and this is not something that's really well known unless you watch one of my videos, it's already a $3 billion a year business for Tesla, right? They're making energy like grid scale and the Tesla Powerwall. I forget what their business solution is, and their grid scale energy storage. That is already a $3 billion a year business, and it's growing every year. So I'm very excited about that. In a lot of ways, I'm more excited about that because I know that Tesla is doing research on other types of battery chemistry too. Their whole thing with cathode diversity that they talked about on Battery Day, they really kind of branched out. And I'm hearing rumblings right now that they may be looking at things like vanadium flow batteries, molten salt batteries, like gravity storage, all kinds of like really cool technologies that have come out there, very diverse technologies that are coming out there. I'm actually, I would be, and here's my thing. I bought several times, Tesla stock where I grabbed it at a high and then I was underwater for like a year and a half, right? And then I waited long enough to where I'm way up on those stocks or on those different shares that I bought. So I would have a hard time finding a price that I would not buy Tesla, not thinking that it's eventually going to be greater than that. And it's going to be useful to me in my lifetime. Like I'm probably going to retire. Like I'm 46 now. I'm probably going to retire by 55. Doesn't mean I'm going to sell all my Tesla stock at 55, but I'm probably going to retire at 55, maybe even 5 years from now. I'll probably still do YouTube videos though. Who knows? But yeah. So let me see. Let me scroll here. What's your prediction on Tesla's share price in 2022, 2023? Could it be at 2 or 3 times or more from now? Julia Fox says, "Hey, I'm not sure it's going to be 2 or 3 times from now. So what is the price now? Like $5.95 or something like that. I could definitely see Tesla now that's included on the S&P 500, and there's a lot more institutional interest in there. A lot more institutional. I mean, there's always plenty of institutional trading on there, but it's happening in larger and larger, ever larger blocks right now. I do think that we're probably going to see more sedate growth out of Tesla. Not as many. I do think we're going to see going forward less volatility and more traditional large cap growth stock kind of growth, right? Meaning if we got 10 to 15% a year, from 2022 onwards, I wouldn't really be terribly surprised about that. I really wouldn't. If we got higher than that, like 15% growth, I'd be really pleased, but maybe a little bit surprised. I'm talking about average growth over like a 10-year period or so. But 2 or 3 times, I think twice by the end of 2023 is possible. 3 times, maybe not. I hope I'm wrong though. I mean, heck yeah, I hope I'm wrong. Let me see here. So Oren says, thanks for the good answer to my question. Hope to be able to train BJJ with you someday. Excellent, man. Anytime you're in San Diego. Yeah. Is it true that in coming years, billions of dollars are flowing to the stock market from the retailers? I'm not sure what you mean by that. You mean from like retail investors like us? Or well, I mean that's true. Let me see here. Yeah, Nicholas, I'm really not sure what you're trying to say there. Fresh Aquarium says, thanks for what you bring to the YouTube financial environment. Thank you, Fresh Aquariums. Look, all I'm trying to bring here is like a reasonable voice. You guys here double your money, make 10 times your money, 15 times a day, from everyone. That's how people get attention. I tried that once or twice. It just didn't feel good. So I'm not going to do it again. But I want to, and I'm fine with growing slower than other channels. I'm just going to continue to be reasonable and calm and be a thinker on the internet. So if you haven't noticed yet, like doing live streams is not necessarily the most comfortable thing for me. Even just doing my own videos, it takes me a long time to do them because I'm not all that comfortable on camera. So do you think that sector rotation will happen in 2021? I can't decide if I should focus more on value stocks due to inflation, rising interest rates fear, or keep focusing on growth stocks as before. So I think the inflation, the inflation fear is definitely overblown. So I've been hearing this since the late 1990s. So it's about 25 years from now. I keep hearing worry about like hyperinflation, and it's never happened. So one of the things that I've been paying attention to that has not been mentioned by any YouTuber other than Meet Kevin. And to be honest with you, I was surprised that he mentioned this because, I don't want to say anything bad about another YouTuber, but it's just not something that I thought he would have noticed. So one of the biggest tools that the Federal Reserve has on controlling the money supply is adjusting the reserve rate, right? The reserve amount, the reserve rate is the amount of bank deposits that a bank has to keep on deposit and can't loan out, right? So reserve requirements have typically been around 7%. So for every dollar that is in the bank, they need to actually keep about 7 cents on deposit, and the rest of that gets loaned out. Well, at the beginning of this crisis, they took away those reserve requirements, and banks didn't go crazy, right? They didn't loan out all their money at this point because they had a lot more risk. But with interest rates at 0, they had no way to attract new deposits, right? And with opportunities drying up to a degree, and interest rates at 0 also, and opportunities drying up because people's credit was impacted and people were losing their jobs. So the ability to loan that money out was declining, right? So they basically said you don't have any reserve requirements. You can loan out as much money as you want. Banks didn't go crazy, but reserves had dipped below that 7% for a lot of major banks out there. At the end of this month, those reserve requirements come back, unless that was in the stimulus bill or something like that. But the Federal Reserve usually controls that. But so those reserve requirements come back. Now, this may produce a short-term bump up in like short-term CD rates or something like that. Because right now, if you have 5% of your deposits are actually in your bank and the rest of your money is loaned out, and you need to get another 2% of your deposits on deposit, then what are you going to do to attract new deposits? Because right now, short-term interest rates on CDs are at less than one half of 1% for a 6-month CD, or maybe 0.3%. I haven't looked in a while, but it's got to be really, really low at this point. So they're going to have to bump up those short-term interest rates on CDs in order to attract deposits to the bank. So that's another thing that's going to contribute to the perception that there is inflation, but it's actually the opposite is occurring. Money is going to be taken out of the supply. Money is going to be taken out of the supply, the money supply at this point after March 31st. So the issuance of these $1,400 checks to a large degree of Americans is actually going to occur at the same time that we see this reinstituting of reserve requirements at banks. So no, I think that the inflation fear is a little bit overblown. There's a few things happening right now in commodities. There's like huge demand for pork products. There's huge demand for soybeans, huge demand for corn, and that's mostly to feed the Chinese market. They are hungry for our food products, and that's what's pushing prices up. But yeah, so the Fed can the Fed prints dollars, yes. They also have a lot of tools to destroy those dollars electronically that you may not be thinking about, and one of those is by raising reserve requirements. Yeah, my favorite YouTuber is under 20,000 subs, under the radar. Well, I don't want to stay under 27,000 subs forever, Royce. So eventually, I mean, so I do a lot of things for work. When I got fired from my job a couple of years ago, I decided I was never going to work for anyone else again. I also decided that I was going to diversify the way that I earn money and diversify my income streams. And YouTube, I'm hoping turns into more of a full-time gig, right? Where if once I have like 100,000 subscribers or so, like I'm dedicating more of my time to this. As of right now, it takes up a lot of time, but I don't make a ton of money at that. Also, yeah, the super chat features are on, guys. So if you guys want to do that, that would be awesome. If you don't worry about it. So let me see. Any other questions here? New DTCC rules make hedge funds cover their shorts cost the same day instead of 21 days. Huh. See, I've lost 30% and sold ARKG. Catherine said that. So Catherine, I haven't sold my ARKG. In fact, I bought more as it went down. But here's the thing. I lost 30% too, or more. I don't know. I don't really pay attention to it day to day, Catherine. But this is not the last time you're going to lose 30% on ARKG. The only reason that I don't hold individual stock holdings in the genomics field is because I've identified pretty much like 5 different areas of genomics that I want to be involved in, 5 different fields, and probably like 50 different companies in those 5 different fields. And so I can't really invest in all of those by myself. I don't have unlimited wealth, so it's more efficient for me to use ARKG, even though it has a relatively high management fee for an ETF. But I realize that most investors do not actually understand what they're investing in when they're buying these genomic stocks. Most retail investors don't. And even before genomics, if you're looking at pharmaceutical stocks, you're looking at biotech, you're looking at anything that was even sort of before genomics, these are incredibly volatile stocks. 30% gain or loss in any period, looking at any slice, if you're looking at 10 days or 10 years, 30% gain or loss in that intervening period is just par for the course for something that's in biotech. So many of these companies are basically set out there. They're so high risk, right? So you have this larger company that has this idea that some research is possible, some cure is possible. They break off, they create this separately taxable entity, the subsidiary. They set it up. They do separate fundraising for it because it's a high risk enterprise. If it fails, the company's going to be in debt. All of the shareholder money will have been wasted, and they're probably going to get sued, right? But they do this all the time to limit liability. So a lot of these companies are set up as extremely high risk enterprises. And most investors who've been invested in the biotech space for a long time, they kind of realize that. So this is probably ARKG is going to be their most volatile ETF out there, probably forever. It will never be not volatile, right? And if you sold out after a 30% loss, do I think it's a mistake? Probably, but I also think that maybe that level of risk is not appropriate for you. It's something you may not want to be invested in something that's going to do that. A lot of the things that we talk about on this channel are things that are extremely volatile, and that you have to have some appetite for risk in the stomach to be able to weather those storms. And I assume that you guys are investing with funds that you don't need tomorrow, because nothing that we talk about on this channel really, you should be investing in things that you don't need tomorrow. Let me see here. Solar stock diversification or just sticking with Tesla Solar? Do you think that Tesla will overtake the business? I'm not sure that Tesla will overtake that solar business. I'm not sure that they will. I think it would be a good idea to have to have some diversification in solar stocks. People have been asking me about Enphase Energy and what was it, Solar Edge. So I have Solar Edge's monitoring. It's a great product, and I have that for my house. And I have the Tesla Powerwall and all that. And I'm actually looking at adding more Powerwall stuff too. I'm trying to what I'm trying to do is figure out is if I can take a couple of old used EV batteries and convert those into storage for my house rather than using Tesla Powerwall, because Tesla Powerwall actually just isn't enough, right? And I think I can do something. I think I can do a little bit better. But I'm actually not an engineer, so I'm just a layman. I'll have to try and figure that out. But let me see. People keep saying that we'll go into a Great Depression. The Fed shot to prevent a depression. I don't know who keeps saying we're going into a Great Depression. Let me put it to you this way. The market scare that happened recently, it's not a surprise to me. I've been waiting for the shoe to drop for some time. But honestly, the time to get worried about that, the time to believe that we were going to have another Great Depression was probably the end of August, early September, when the unemployment benefits expired, when people were talking about not extending, eviction moratoriums when we were in the middle of a pandemic. Now is not the time to be concerned about an economic collapse. And if you look at the end of the Spanish flu in 1918, the end of the Spanish flu in 1918 also coincided with the end of World War I, right? So we had all this industrial capacity that went offline because of the end of World War I, because we weren't making war materials anymore. We had the end of the Spanish flu, the end of a pandemic. That led right into the Roaring '20s, guys. I mean, that did not cause a Great Depression. The Great Depression came 10 years after the end of the pandemic and was probably not related to it at all. So is the Fed's concern? So the Fed has two concerns in the United States, Kingston. And I mean, this is actually in their charter. And this is a huge difference between us and, let's say, Europe, most central banks in Europe. The Fed's charter, basically, they're there to control inflation and to facilitate full employment, right? If you look at Europe's central banks, the only thing in most of their charters is controlling inflation, because that goes all the way back to World War II, where they really blame inflation for the rise of fascism in Europe, which I understand why that's a concern. But at this point right now, they could have a wider charter when it comes to their central banks. But our central bank is like, when it comes, if their biggest concern should be deflation, I don't think so. All of the doomsday scenarios right now that people are talking about, those simply aren't adding up right now. The middle class in the United States is sitting on mountains of cash. They've been accumulating money since the middle class in the United States has essentially been accumulating money since this pandemic started, while folks in the lower income stratas have really been hurt by what's going on. Folks in the middle class have not. They've actually been accumulating money. I know someone made a comment on my channel about pent-up demand being BS. That people are still scared. They're going to save money. It's pent-up demand. I have to assume that this person who made the comment is not an American or isn't exposed to as many people as I am. Americans do not save money. Before the pandemic, 53% of Americans could not cover a $400 emergency without going into debt. Right? We just don't save money. We tend to consume everything that we have. If the middle class has money to burn right now and their savings rates have bumped up to something like 30%, it's because they can't spend the money. There's nowhere available to them to spend it, and they've already bought everything online that they could buy. Right? Experiences, I think, are what are going to explode after we open up completely. But I think we'll hit probably full vaccination by August or so. But before we have full vaccination, you're going to see the economy explode. But in experiential things like going out to dinner, going to a movie, going on a cruise, traveling somewhere. I know the only thing I want to do when everything opens up is I want to leave. I mean, I live in San Diego. It's basically like vacation here every day. But still, I want to leave. I want to go to Mexico, lay on a beach, drink in hand, go surfing. I want to take a fishing trip somewhere in Colombia or something like that. I don't know. I want to do one of those things. And I think there are hundreds of millions of people like me that the first thing they're going to do when things open up is they're going to move. They're going to leave, and they're going to do something experiential. If they have money, they've already bought everything they wanted to buy, right? And this is actually going to spur demand and spur job growth for folks at that lower end of the income strata. So, when it comes to some of the business that I own, like we're planning for our huge push, our huge advertising push. We're planning to hire new employees, all this stuff, all starting at the end of May, beginning of June. So, no, I'm enormously optimistic about the business environment at this point. I think that 2021, 2022, this is going to be my year from June of 2021 to June of 2022. I think this is going to be my year in terms of my businesses largely because I'm lucky I've survived at this point and none of my businesses have gone under. I think that basically puts me in a really good position to benefit as we come out of this. And there's a lot of small business owners that haven't survived, but the ones that have they're going to be expanding businesses. They're going to be hiring people. They're going to be spending money. So I'm looking at this. I'm enormously optimistic now, unlike a lot of people that I've spoken to recently. And part of this is just me. I realize that when things feel their darkest, that's right before dawn, right? That's right before things are going to take off. So, yeah. Let me see here. Thank you, Doug. Thank you. Kingston says, they say we're ending a depression every year. Actually, if you listen to Ray Dalio, Ray Dalio is a brilliant guy. He's a brilliant investor, and he has some amazing insights. But if you listen to Ray Dalio, we have a depression every year. We're about to go into a depression every year. And let's talk about that. If we were about to go into a depression, we would not be seeing declining bond yields. Bond yields are declining because the price, rising bond yields. I got that the opposite. If we were going to a depression, we wouldn't see rising bond yields. We'd see bond yields dropping like a rock because prices of bonds were going up because demand for them was so high. Right now, there's a couple of different concerns. Some people are concerned about some short-term inflation. Some people are concerned about hyperinflation. I think those concerns are overblown. I think that people are moving money out of bonds and they're looking for opportunity in stocks right now. People are pretty bearish on bonds. That's why the prices are dropping. That's why demand for them is dropping. That's why yields are rising, is because money is it looks pretty bad for bonds right now. If we're not looking at rising interest rates here. Let me see here. What are your thoughts on people who draw 40K long-term capital gains every year for the sake of tax benefit? If that is if that's your income strategy in retirement, which is you're buying stocks, holding them long term, and you're selling those and then using those funds and taking long term capital gains every year for the sake of the tax benefit, that's a great strategy. That's an incredible strategy, that's something you should probably keep doing. A lot of people don't realize this, but if you're a young person in particular, you should really be using a Roth IRA no matter what tax bracket you're in, even if you're in the highest tax bracket, for a couple of reasons. Number one, that highest tax bracket has never been lower than it is. It hasn't been lower than it is today for quite some time. But number two, when you probably won't be in a lower tax bracket when you retire. Almost everyone thinks they're going to be in a lower tax bracket when they retire. They probably won't be once you get to that point. And the other thing is all the short-term buy and sell that I do inside of my that folks do inside of their Roth IRA. I don't do that. That all happens on a tax-free basis, right? As long as you don't take the money out. But what I'm saying about once you hit retirement and you won't necessarily be in a lower tax bracket, that's because it's always set up towards like a 20% tax bracket or a 22% tax bracket. And that tax bracket is huge. It goes from like $70,000 a year in income up to $140,000 a year in income for a married couple. And it encompasses the vast majority of like working Americans or people that have retirement income, right? And it's just a giant tax bracket that if you have retirement savings, you're probably going to still be in that tax bracket. And the IRS knows this. So you're deferring income right now in the 20% tax bracket, so you can pay a lot more income later on in life in that 20% tax bracket. The problem is also when you get older, like in that 72 year time frame, when you're over 72 years of age and you pay something called required minimum distribution, you no longer have control over how much is coming out of that IRA, and because of that required minimum distribution, and it can cause a giant tax bomb. In fact, my friend that owns that runs Heritage Wealth Planning, he wrote a book on this called The Tax Bomb, and it's all about how using Roth conversions, even if you're in a higher tax bracket, can really save you from being in that tax bomb later on. So, yeah. So, by the way, I tried to sell my soul. Yeah, that's funny. How do you feel about EV power play like Romeo Power? I've been asked about Romeo Power a couple of times, Thomas. I haven't gotten around to it. So I haven't gotten around to looking at that. So I will look into Romeo Power. I looked into QuantumScape, got very excited about QuantumScape until I looked at their financials, looked at the projections, looked at how far they were from commercialization of their product and how far that stock was already bid up. Like, I like QuantumScape at sub $15 a share. And at that point, it's still a speculative risk. QuantumScape right now at $40 a share, an $18 billion valuation is just ludicrous to me. They're 4 years away from any product at all being sold, 4 years away from revenues, probably 7 or 8 years away from profitability. Let me see. When you go to Mexico, take some pics and post it on your YouTube account, and then you can write the whole trip off, right? Actually, that's a very good question. I could, if I actually posted a video from Mexico, maybe I could write the whole trip off. Interesting. Doug B says, Roth, yes, I was surprised to learn I might not drop tax brackets. I'm still worried about rising rates. Worried about rising rates? So I'm not sure that like I said, I'm having a hard time understanding the rising rates thing, especially on the 10-year treasury. It just, people see other opportunities rather than bonds at the 10-year treasury, right? So a lot of people that are buying the 10-year treasuries, that's not necessarily talking about like the current price of a 10-year treasury that's issued today. That's trading that 10-year treasury on the market. The average yield to maturity might be something closer to 7 years, or the average duration of that bond grouping might be closer to 7 years or something like that. That's just saying that a lot of those people see opportunity in an asset class that's not bonds, so they're selling out of their bonds right now while interest rates are zero and these bond prices are as high as they're going to be, and they're looking to get greater return in some other asset class. Thoughts on full self-driving? Actually, yes. Somebody in my Patreon group posted a video. It was kind of long. It was like 30 minutes long, but it was a video of this guy just going through his spreadsheets on how he values, calculates his valuation of Tesla. And he starts off with very conservative numbers. And I will post this to my community portion of my YouTube page. And he posts this. He goes through this very conservative valuation based on just auto sales. And then he adds in Tesla Energy. He adds in insurance. He adds in everything, and he gets to full self-driving. And we look at the subscription model for full self-driving, and even looks at the possibility of where we don't reach something like that really is level 5 full self-driving, right? Where we have something that's less than that. And instead of charging the arbitrary $200 a month, he can only charge like $100 a month for that service over time. You're still looking at something like, in today's dollars, that is going to add $1.3 billion per month, right? Per month, at a real bear case for how many Tesla vehicles would be on the road, right? He was saying that they only get up to selling about, in this look, he was saying they only sell 6 million vehicles per year rather than the 20 million they're planning on. Full self-driving never really occurs, and it's only like partial full self-driving. So they charge a subscription of like half of what they could normally get. It's still the valuation. I'm really excited now. Like, I'm not someone who's likely to use full self-driving unless I go on a trip and I literally want to take a nap behind the wheel, right? I'm just not someone who's likely to use that. But when I look at the subscription model behind that, and I understand Americans' financial habits, a lot of Americans don't see the point of paying for a large chunk of money up front. They just can't deal with the emotional pain of seeing that money leave their bank account, and they'd rather pay that subscription, even though it's going to cost them more over time, right? And that's going to benefit, and of course, that's going to benefit Tesla. The other thing that wasn't considered, and the guy actually did kind of a poor job of calculating how much Tesla is going to make on insurance. I think once full self-driving comes along, So self-driving now, from what they've tested, based on the amount of road miles they've tested, it's already better than humans, right? They're having fewer collisions per million miles driven with their software driving than they are with humans. It's already better, which means that it's actually going to be very soon. It's going to be impossible to calculate insurance, right? Like right now, based on like laws of large numbers, giant sample sizes we have, it's easy for insurance companies to say, this is how many collisions we're going to have per million miles driven. This is the demographic makeup of our member base. This is what we charge for insurance. It's extremely easy for companies to do that now. So I think it was Cascades Academy or something that said that full self-driving was going to destroy auto insurance. That's just, I mean, that is not an exaggeration. Full self-driving is going to destroy the way that insurance is calculated. And we're going to have to come up with a new way of quantifying the risk in insurance. And I don't know what you guys know about the insurance industry, but this is something that I've been also, these sorts of calculations are something that I've been involved with for a long time. I'm actually really excited about Tesla's insurance business. I don't think they're as excited about their insurance business as I am. I think it's going to have basically the same margins for a while until other companies start doing what they're doing. It's going to have the same sort of margins that you get with software companies. So yeah, I'm very, yes. Nitin says, do you think the correction is over? Yeah, I think I don't think it's necessarily over, but I do think we probably hit the bottom on Friday morning. If you look at the volume of buying that happened like right around 10 a.m., I think that we've probably seen the bottom. I think we're going to probably bounce off of that a couple more times before the end of May. But yeah, I do think it's pretty much over at this point. And do you think transportation shipping crisis by sea we are in could lead to growth in the sector, or is a sign of potential downfall due to rising costs? Kyle, so I'm old enough to remember when dry shipping companies were hot companies to own, and that business collapsed in 2008, has never really come back the way it has. Maybe the profitability of that business may have been overestimated to begin with. These companies mostly, when you're looking at like shipping of bulk goods, dry shipping of bulk goods using like container ships, these companies generally pay large dividends, and they're not really seen as growth stocks. Let me see here. I'm gonna take a little sip of my coffee. I would like to have a business meeting with you in Tijuana or Mexico City, if you know what I mean. Drinks on me because I'm writing them off. Yeah, that's true. I live like 8 miles from the border. I can literally go to Tijuana for lunch, and I have done that a couple of times. If you're ever there, there's actually a park there. It's called Telefónicas, and it's like a gastro park, and it's a brewery. It's a giant brewery, and it's surrounded by food trucks, and it's just absolutely amazing. And there's like 4 or 5 of those in Tijuana now. A lot of people don't realize this, but the drug war had a weird effect in Tijuana. It's actually become kind of a foodie destination now, and because a lot of the tourist business dried up, and they sort of cleaned up a lot of these areas. It's really nice now in a couple of areas. So Larry Hall says, sell Tesla and buy NIO. Where do you think a better growth opportunity is? I would not sell Tesla to buy NIO. This is an unpopular thing to say, but NIO is never going to be the next Tesla. It doesn't mean that it's going to be a great company. It doesn't mean that it's going to be a great investment, but it's never going to be the next Tesla. Like I took a $6,000 initial investment in Tesla, and it's now worth a lot. Let's just put it that way. Based on where I bought NIO, it still won't happen, right? I bought NIO. Most of my NIO shares I bought at sub $5. I stopped buying NIO like about whenever it hit like $11 a share or something, like in June, and I pretty much stopped buying it at that point. And by the end of the year, it had become 13% of my overall net worth. But NIO will still not be the next Tesla for a couple of different reasons. So I do think that they're going to compete internationally better than, say, Li Auto does. I do think, especially XPeng. I think, like I mentioned this before, I love XPeng. I think it's a great company. I think they're doing a great job with building out their factories, expanding their ability to produce. I think they made a huge branding mistake. I think that XPeng is a clumsy name. I don't think it even is a great name in China, and I don't think it's not going to go over very well outside of China. NIO, however, is a name that just works well in multiple countries all around the world. I do think they're going to have a better time, a better chance of doing that. But I think that they're actually going to have a hard time competing in Europe because of brand loyalty there. That's wrapped up with nationalism because they actually have some stiff competition already. The Renault Zoe is one of the best-selling electric vehicles in Europe right now. It's a small car with a range of 230 miles, and it costs about 26,000 euros. And by all accounts, it's a great vehicle, which says something because Renault is not known for its great vehicles. If there's any French people listening to this or watching this, I will not apologize. I've owned a Renault. So, but they're not known for their fantastic vehicles. But there's a lot less to go wrong with an electric vehicle in a lot of ways. It's a much simpler piece of machinery, and it's a fine vehicle, and people really like it. And VW is planning to have 100% lineup of electric cars here pretty soon. Lots of other companies are planning the same thing. And I don't know if you guys knew this, but VW is actually the largest car car seller in China. They hold about 14% of the market in China. So the Chinese market is much more fractured than it is in the United States, and even more fractured than it is in Europe. The Chinese electrical market is, vehicle market is. So they're going to have a lot of competition domestically, and I do think they're in a prime position to be one of the top competitors in the country. I really do. But outside of the country, I think they face some of that challenge of being a foreign company, some of that challenge of being a Chinese company, and some of that challenge of the two markets that they're going to compete in Europe and in the United States are probably. They're going to have competitors that have a really huge head start on them. It doesn't necessarily seem that way from our outside perspective, but our friends in Europe who watch our channel could tell you that Tesla is not the only game in town. There are lots of other people producing electric vehicles at this point. Yes, let me see here. Kingston James says Palantir is underrated, possibly. But look at Alteryx, look at IBM, look at all these other companies that are engaged in this AI space. AI, the whole business AI space is something that is poorly understood at this point by the investing public, and a lot of people think that Palantir doesn't have any competition for some reason. They've got tons of it. You never answer my questions today, Nicholas. Which question? I thought I answered one of your questions. Josiah Nelson, any thoughts on Jumia? So Josiah, I like Jumia, but here's the thing: I may like Jumia just because I really love the idea. So I've been hunting for a long time to invest in something having to do with like the African markets, just for the longest period. I want to be involved in something like this, and I've looked into the company. And I'm looking into the news, looking into the financials, and there's nothing in Jumia's financials that blows any whistles for me in terms of warnings. There's nothing about their strategy really that sets them apart at this point. But the thing is, I really like the company, and I think I may be a little bit, like I said, I may like it just because I want to like the company, just because I like the idea of this African e-commerce thing really taking off. So I'm going to reserve judgment on that until I've done a little bit more research and I have a clearer opinion. So Doug B said, Nicholas Morin says, why institutions sell if Q4 of NEO is not what they expected? Aren't they investing for the long term? So which institutions sold? Did Bailey Gifford sell? Because I can guarantee you they didn't sell. They're one of the largest investors. Did Sequoia China sell? Because they didn't sell anything as far as I know. So there were institutions here in the United States that sold, but there could be a number of reasons that they sold. Some of that could be for political risk. Some of that could be about currency. Some of that could be repositioning into other Chinese companies and diversifying their positions over there. There's just a lot. So there's a lot going on, and put it this way, not all institutional investors are purely long-term investors. Okay. And let me put it to you this way. A mutual fund manager or an ETF manager has not an obligation, but they certainly have the pressure to perform on a year-over-year basis. Whereas I have no pressure to perform on a year-over-year basis. I have a goal that I want to hit. Like I want to hit this dollar amount by age 50. I want to hit this dollar amount by age 55 and start using my funds to live off on at that point. And I want a second dollar amount by age 60, and then after that, I don't really care because I'll never use the money that I have, right? A mutual fund manager or an ETF manager is not under the same sort of restrictions. If they don't show some sort of annualized growth, then they will lose deposits, right? So some of the times they're trading around short-term disturbances in the market, and they're going to jump back in. If you look, Kathy Wood does this all the time. She buys and sells Tesla. She buys and sells Palantir. She buys and sells all kinds of things. She doesn't just buy and hold like we do. She's trying to trade around certain events as well. Jason, how many single stocks do you own? I know you own a lot of ETFs. You know what? I think I only own about 60 individual stocks in varying amounts. Some of them thousands of shares and some of them only 100. See, and Juck Fund says you have a position in Palantir or on Palantir. Yeah, we covered that. So I do have like 100 shares of Palantir. It's really just a placeholder position. So I'll keep looking at it. Let me see. Your opinion on OGI and marijuana play from Canada. I'm sorry, I don't have an opinion just because I don't know OGI. I don't know that company. I'm sorry. And but Doug B responded to you, and he says the Motley Fool has a pretty positive article on that. I'm going to scroll back here and look. All right, guys. NASDAQ is getting into the red again. Gee whiz. All right, so I don't know what futures look like right now. But I would say, guys, futures are not an indication of where you should be buying and selling. I don't know. I had a friend of mine who decided that he was going to look at the futures the night before or something like that. And the first thing he was going to do in the morning was to buy one of those inverse ETFs at the market, whatever the market was. He was going to buy the inverse of it, and he ended up just losing his rear. He lost a lot of money before he decided that strategy wasn't really a very good one. Sometimes it can be an indication of where the market is going to go, and sometimes it isn't. When I looked at futures right before we started this, I think it was up 200 points. Ask me if I'm going to do anything because of that. No, I get up early and I'm awake for market open every morning. So antitrust during Biden term in terms of what companies would they be going after in terms of antitrust? So I don't know. Your opinion on REKR. I don't know who they are. Also, your thoughts on CRM? It's cheaper now. So I've used from a user perspective because financial firms use these customer relation management software pieces all the time. So I've used both Salesforce from the user perspective and HubSpot from the user perspective. If you are, it's weird that Salesforce is called Salesforce and HubSpot is called HubSpot. If you are looking at managing an actual sales force, I think HubSpot's actually a much better product. Now, granted, guys, this is just from my perspective, but I think HubSpot is a much better product than Salesforce is for certain things. When it comes to like tracking tasks and things like that, I in a lot of ways, the way that's done is a lot better with Salesforce. When it comes to tracking leads, actual customer management, relationship management, I think the HubSpot's a lot better. So I think CRM is probably still going to continue to grow. I think the HubSpot is probably going to be able to grow, but I actually like HubSpot in the space a little bit more. Kingston asks about Facebook, Amazon, Apple, Google. I don't think any of those are value traps at this point. I think they're all still innovative players, and I think they should be in everyone's portfolio. And if you have a 401k or something like that, then it probably is in your portfolio already. Juck Fan asks, are you still bullish on Alibaba? Yeah, and I'm actually bullish on them long term. They're pouring a lot of money into two things, research and development and, well, probably corporate espionage too. But they're pouring a lot of money into research and development. I'm extremely bullish on Alibaba over time. But I put them in the same category as Facebook, Amazon, Apple, and Google. They're innovators, they're all that, but they're kind of a step above your general large cap growth stock. But they're a step below your true smaller innovators in terms of how much I expect out of them. So, I expect if I own all of those, I would expect an average return of roughly 12% annually if I looked at that over a decade, which is higher than the market itself, but it comes with a little bit more risk too. So we covered XPlung. So XPlung's earnings are coming out tomorrow, guys. I did a video, and they're coming out. First of all, they're coming out before market open, which generally is a sign that they are optimistic about their earnings, right? If you come out after market close, that's generally, that doesn't always mean that, but sometimes it's a sign that they're, especially if you come out after market close on a Friday, that's a sign that, hey man, you want people to have time to digest the bad news. But if they're coming out before market open on a Monday, I think that they think that it's going to be good news, right? They're reporting their fourth quarter. They're also going to report what we expect. They had a precipitous decline in deliveries for February, partially due to coronavirus outbreaks in China, partially due to the Chinese New Year, and they had a decline. But here's what I expect: I expect to see widening losses with them, just like we saw with NEO. XFund is pouring money into a couple of new subsidiaries that they created for business lines that are related to, they have this new AI robot company that they've created. They've also created a company that literally says in its description, like in China, when you form a new company, you kind of have to file this description of what they're going to do. And one of the things that they said they're going to do is they're going to manufacture components for a battery swapping network. Now, I don't know if that means in the future they're committing to some sort of battery swapping. I don't know if they're just going to build NEO-compatible battery swap stations, because there is a degree of cooperation between NEO and XFund when it comes to charging. There's also interrelationships when it comes to the people who are invested in them. The idea that they compete against each other is not really a reality. They're not in the same space. But XFund is getting into the business of making battery swap stations. I don't know what that means. And that's literally in the paperwork they filed for this new subsidiary. So I don't know what that means for XFund going down the road. If their next model is going to have battery swapping capability, I don't know, but we'll see. Let me see here. Have you looked at CRISPR? Yeah. Yes. The CRISPR-Cas9 technique, I think that was patented sometime around 2008. So they're actually coming up on the end of that patent, at least. I think it goes they last roughly 17 years or so before they in that patent. But almost every gene editing company out there bases their technique on CRISPR's Cas9, or bases their company on CRISPR's Cas9 technique. So yeah, I'm actually pretty excited about them. I'd like to see what else they're coming out with. That's one of the things I don't really understand. Some of the white papers that I've read recently, I don't really understand some of the studies that I've read recently. So I need to take a little more time to digest that. But CRISPR is something that I don't hold as an individual investment. I do hold that through ARCG. And there's one other biotech mutual fund that I've held for years. I just can't remember the name of it off the top of my head right now. So Kathy Wood owns a lot of CRISPR. I would think that any active manager, period, who manages money in the space of genomics or on biotech is going to own CRISPR, because they are, just because of who they are and how they're positioned. So, Jason, any thoughts on Palantir likely gaining the AT&T contract due to some YouTube detectives calling it out? Due to some YouTube detectives calling it out? I can't imagine YouTube detectives having, like, anyone with a YouTube channel having that much of an influence on AT&T gaining a contract. So I said, Palantir, for me, the future of Palantir is much less clear than to me than it is to a lot of other people. Like I said, because I'm familiar with some of their competitors. I'm familiar with the type of work that they do for the government. I'm not as familiar with the type of work that they do for the private sector. But no, I'm less positive on that, just because I know that they're competing against some pretty good teams themselves. So. So back to XFund. I'm sorry. Plan on seeing widening losses from XFund. In fact, I wouldn't say that their financial results will not look substantially different from NEO's. NEO's results, fourth quarter results or full year results, they weren't bad at all. They were a little bit. I mean, the loss was a little bit wider than I expected. A widening loss, just not as much as it widened. But when you think about it, they're doing a lot of investment. Both of these companies are doing a lot of investment in expanding their industrial capacity. I really think that XFund's financial results will be substantially similar, but I don't see how much further they can drop. if you're in a position to buy more after this, it might not be a bad time to do that. So, Baba, Jack Ma got into trouble with the government, and as much anticipated financial IPO didn't go through. I was interested and also disappointed. Yeah, I was pretty interested in that too. It also goes to show you that that's the degree of political risk that I'm talking about. Like, I saw the speech that Jack Ma made that supposedly got him in trouble. And to be honest with you, I didn't think it was, I mean, it was critical of the government, but it was all criticism that I thought were perfectly warranted. They're standing in the way of basically some really outdated regulations are standing in the way of innovation. And he's saying, get out of the way and let us innovate. And everyone, the whole country is better off. That was seen as unforgivable criticism of the government, and he was slapped down and they made him disappear for a little while. And to me, that's actually kind of frightening that they can do that. What is your thought on Snowflake? I got to be honest with you. Just like Palantir to a degree, I didn't understand the mania behind the IPO and why it spiked so high. I think it's actually closer to reality in terms of its valuation now after the crash than it was before. But even now, it's hard for me to put a value on that. So, advice on not working for someone, quitting your job, and management of your portfolio. So, guys, I don't live solely off of my portfolio. Like, I do have a number of like small businesses that I own, but particularly the older you get, the higher risk you have that if you lose a job, you were never going to replace your income. Particularly if you're in management of any sort. If you're a 45 to 55-year-old manager and you lose your job, you may never replace your income again. And everyone, not everyone, but many people have the goal of going into management. It is a double-edged sword. Yes, you can work your way up the chain. It also makes you the first target for a layoff because you're one of the highest paid individuals there. They can always replace you with somebody younger that earns less. And I've seen this happen over and over in my practice. I think this is the scariest thing about being a financial planner is when you can't make somebody face reality. Where I had two guys that I knew in my practice. They literally lost the job on the same day. They didn't know each other. They lost the job on the same day. One of the guys was a high-powered executive for Johnson & Johnson. He was probably 52 years old. Was probably making $400,000 a year. But he very specialized in this type of industrial production now, and realized right off the bat that he was never going to find the same job again. The other guy that I worked with was actually in the financial industry like me, even though I managed his portfolio. He was a manager of financial advisors, right? And he made really good money. It's all bonus money, but he lost his job, got laid off from Merrill Lynch or something like that. And this is a totally different industry. Like I knew from my experience that he was never going to find another job making as much money as he was making right then. Number one, if you don't voluntarily change in that industry, it always impacts your future earnings. But number two, it's just based on his age and where he was in the management structure, he's not going to replace his income, especially after being unemployed for 6 months. That wasn't going to happen. So the guy that worked for Johnson & Johnson right away went out and bought a franchise with the money that he had. And he didn't have a ton because this guy spent most of his money, but he bought a franchise in something called The Maids, which was literally a franchise company that cleaned houses. He and his wife, he went from making $400,000 a year to literally on his hands and knees scrubbing houses, within a 6-month period, right? And I thought this was utterly amazing. So he takes this maid business and he builds it up to like 50-something employees, giant contracts, right? With these apartment complexes, all kinds of things, and they end up selling that business for a couple $1 million later on down the road. I don't remember exactly how much. It wasn't that much, but it was over $1 million, maybe $2 million. But they ended up selling that business, and he's able to retire comfortably. Maybe not have the retirement that he envisioned that he wanted, but he was able to retire because of that, because he planned ahead. The other guy, I watched him refuse to take a job after job after job, refused to take job after job after job. He was calling me every couple of months, wanted to take more money out of his accounts just to fund his lifestyle. He never cut back on his spending. The other guy cut back on his spending. This gentleman who came out of the financial industry that lost his job, he never cut back on his spending. He spent every dime that he had, and at some point he was no longer my client anymore just because he had drained all of his accounts. I'm not sure what happened to him, but I spoke to him like 4 years later, and he had finally taken a job making like a quarter of what he made before. So he just couldn't face reality, and he just couldn't face reality, and that literally caused him to destroy his entire financial position. So having that ability to leave your job, walk into your own business at any time, I think is very important, especially the older you get. It's extremely important. Anyway, I shared some personal stories there, but that kind of, when that happened to me and I lost my job 3 years ago, that experience was at the back of my mind. When I was younger, I watched these guys take two different paths. One immediately just said, all right, my old life was over. I'm going to start a new one, and this is how I'm going to earn money. And he did it to me in a way that I thought was the hardest thing he could have done. And he succeeded at it. And the other guy who tried to hold on to what he had before. And no, I decided I was going to go a different way. I wasn't going to be dependent on anyone to have a job anymore. I wasn't going to be dependent on anyone for a paycheck anymore. And I was going to have multiple things that I do in case that any one of them failed to still have income coming in from other sources. I think everyone should do this. Your employer, I don't care who they are, they're not really your friend. You're just a cog in their machine, and you have to look out for yourself, especially the older you get. So, but anyway, Thomas, that was a really long-winded answer to that. But yeah, quit your job and find your own way to make a living. But like, keep your job, find your own way to make a living, and be ready to move when you do lose your job. So, see, any thoughts on Zora? They focus on scaling subscription business models for other companies. I've never heard of them, but that actually sounds like a really interesting business model. Like, they focus on scaling subscription business models for other companies. That's very interesting. So one of the stocks that I bought, that I'm sure you guys have never heard of this, but this is one of the most successful investments I ever had, was a company called Asta Funding. And all they did was they bought old credit card debt and tried to collect on it. And I invested in them because they called me. They told me that I owed $55 to some electric company for an electric bill that I didn't pay, because I used to move frequently, like every 4 to 6 months, because of the work that I did. And so they told me that I owed like $55 for something that I owed. I paid it off because I was so embarrassed that I had something bad on my credit. I just paid it, not thinking about it, not realizing that it was like 10 years ago. It was well beyond the statute of limitations or collection period. They couldn't put it on my credit anymore. I called them up and said, hey, what's your business model? And they said, oh, we buy debt that's beyond the statute of limitations for reporting it to credit, and we buy it for like 5 cents on the dollar, and then we only call people with good credit, and they're so embarrassed they just pay us right away. So this was such a good business model because it relied on something that no one else was thinking about. I think maybe that Zora thing, that's one of those underground things that may be a business idea that no one else is thinking about. So I'm going to look into that. I'm going to scroll back on these. So how the market. So do you have any views on how the market can be bullish on the old energy sector with so many car companies moving towards an EV future? Well, for a couple of reasons. Number one, so the energy companies call themselves energy companies to a degree, when what they really are is an oil mining and processing company, right? So there's still going to be oil that needs to be mined and processed for a variety of applications, even as EVs lead, right? So let's put it this way: 49% of all end consumption of petroleum in the United States is just from light passenger vehicles, not counting like trucking, maritime shipping, or trains or anything like that. And half of that's going to leave, let's say, in the next 15 years. It still leaves a lot of business to be done. But I think a lot of people are bullish on the old energy sector right now because it's just a recovery play. Right now, if you look at market penetration of EVs, it's still shockingly low in the US, despite the fact that you and I are very much engaged in this because we're really interested in it. A lot of people in the US are not interested in it at all. They don't care. So anyway, I think that a lot of folks are interested for a recovery play. I do think that 4 or 5 years from now, we see a terminal decline in a lot of these oil companies. Like I have actually sold out all of my my oil holdings, and I started last year selling all of my individual stocks in oil. I grew up in the oil industry. My first real high paying jobs were for the oil industry. I've always owned oil stocks. It's an industry that I know very, very well. I actually started selling out of my oil stocks last year, right before the pandemic. Started selling them, and so I don't do like recovery plays or short term plays a lot. I think there is opportunity there in the next 2 or 3 years. It's not something that I'm interested in. Let me see. Top Trader says Lucid Motor will be the second major U.S. EV company with a legitimate product. In your opinion, where do you see their stock in 2 or 3 years? So first of all, First of all, I actually spoke with someone last night, or actually Friday night, and they made a couple of interesting points about Lucid. And so I've been to their factory, and I've kind of driven around their factory. I've seen it, and I happened to be there while they were doing a test drive of their car, and there was an audience there, and I kind of like slipped in. But the deal is that we weren't allowed to take a close look at the car. It didn't. I mean, it's hard to see like how fast something is going from an outside perspective. Unless you're in the car, you can't really tell how fast it's going, right? And I'm not really impressed by performance also. But I'm looking at Lucid, and I'm thinking that there's no reason to think that they're going to be as successful as Tesla. I'd like for them to be as successful as Tesla. I'd like for them to be seen as a viable competitor. But where do I see them in 2 or 3 years? They could be anywhere from bankrupt in 2 or 3 years, or looking pretty successful. But I don't see Tesla-like growth. I actually see them having a harder road ahead of them than Tesla did. They're attempting to do the same entry point in the market, like building that necessarily very expensive vehicle that serves a really small market. And I think there's going to be that market there. Like the point has been made a couple of times on this channel that just because the Model S is a great vehicle, the Model S with ludicrous mode and $170,000 is a great vehicle, doesn't mean that somebody just wants something different, and that plenty of people will just want something different. That's probably going to happen. But I haven't seen enough on the vehicle themselves to really form an opinion of it. And that actually kind of has me a little bit worried. And there's a couple of people that pointed out some videos to me saying that like Lucid's not legit, Lucid's a fraud or whatever. I found those videos to be less than clear and less than honest. I think that they're probably legitimate. I will say that one thing though, their current factory they have now has a capacity of roughly 34,000 vehicles. They've only got, I'm actually only 34,000 vehicles. They have no way to, basically they can't produce enough to really make a dent in the market right now. Like they've got to immediately move down market and start making more vehicles and larger vehicles. So Tesla was able to do something that no one else has been able to do in 100 years, which is to create an industrial manufacturing base for cars from nothing. From nothing. He didn't take over another factory. He didn't, cannibalize another business. He started it from scratch, which has not been done now for 100 years. And is Lucid going to be able to do that? I actually have my doubts about that. So, and put it this way, I want them to be successful. I want Tesla to have real competition because I think the competition benefits everyone. So, Nathan Wynn says the Hang Seng Index is going red again now. Looks like tomorrow is going to be a bloody day for us again. Maybe. We'll see. So, yeah, M2 money supply is up 25% in 12 months. 80% of US dollars has been created in the last decade. Are you following Bitcoin at all, explaining the story well? I follow Bitcoin a little bit. I haven't made a video on it just because I'd like to have a better idea of what I'm talking about before I make that video. So the M2 money supply going up 25% in the last 12 months. A lot of that has to do with Fed printing money, but a lot of that actually has to do with no reserve requirements being on banks. At the end of this month, all those reserve requirements on banks are going to be slapped back on. You're going to see a contraction in the money supply at that point. So anyway, Royce O'Brien, thank you very much. 1,400 reasons for the market to jump on Monday. Yes, 1,400 reasons for the market to jump on Monday. Just because of an odd coincidence, one of the best income years I ever had in my entire life was 2019. So I haven't gotten any of the stimulus dollars. But yeah, Nicholas, you said you've asked this before. Will NEO go back to 60 before June? I thought I answered that in who knows? And like I said, if you're a long-term investor, it probably really shouldn't be that important. NEO is probably going to react stock-wise, performance-wise, a lot like Tesla did, where it had long flat periods and then explosive growth, and then long flat periods and then explosive growth. So, what do you think about Sunworks, ticker SNW? I don't know that company. Rocket Man the Third, hey, what's up, bro? The pumping billion $40 US dollars was leaning or 80%. Okay. All right. So basically, if you guys use the super chat features today, I wanted to thank you very, very much. I realize it's It's not something you guys have to do. I was thinking about doing memberships for the channel too, although I do have a Patreon. If I do memberships, guys, don't sign up for both the membership and the Patreon. I'm not going to do anything for YouTube memberships that I'm not doing in the Patreon. So don't do both. Just do one or the other. But I haven't done that yet, just because I haven't gotten around to it. I'm kind of lazy. I'm definitely not exploiting all of the different ways that I could be making revenue from YouTube. Part of it is I'm just making videos, and I like to make videos, and I'm just figuring out how to do the live streams now. But so anyway, let me know what you guys think about the market next week at this point. You guys have any questions? Because I'm thinking that tomorrow could be another bloody day. But like I said, I think the bottom was actually on Friday. And when I'm saying like where Tesla hit 540, that was amazing. I actually bought a single share at like 549 or something like that. And then I got a phone call. And by the time I got off the phone, it was already back up to like 590. Any thoughts on the premium attributed to U.S. stocks in relation to Chinese stocks? U.S. has worse GDP metrics than China. So here's the thing, Josiah. Because of the political risks in China, meaning that at any point that the CCP decides that a company no longer deserves its favor or its founder no longer deserves its favor, that company never performs again like it was before. And they don't have to do. So, I mean, China's a 2,500-year-old administrative state. They know how to weaponize red tape, and they don't have to do overt things to destroy. Like, in order to limit Tesla's business in China, they don't have to ban Tesla. They don't have to do anything other than make life difficult for them by creating tons of red tape. Like they created a recall for their cars out of thin air this year. There was no reason for this recall. And there's a number of different. I watched a number of different videos from engineers who talked about this, saying like there's no reason for this recall that China forced Tesla to reinstate and replace this part. But that's literally just a way of managing Tesla's image in China. I think there's always a degree of political risk that exists in China that doesn't exist here for the most part. And like what happened with Jack Ma, where Jack Ma said something that to me was critical, yes, but I'm from the United States. I believe that I'm as much of a free speech absolutist as you can get. I think you should be able to say whatever you want. You should just be prepared to defend it. That's the one thing that people forget about free speech. If you're going to say stupid, illogical things or lie, then I'm going to challenge you, and maybe not in the nicest way. So I think that everyone should be able to do that, and I realize that's not the case in China. Like you only have free speech to the point where you offend someone who's very powerful, and then unlike here, where maybe we get you fired from your job, you end up in prison or disappearing for months at a time, like it happened in China. I think that's absolutely always going to be the case in China. It's just a different society than we are. They don't necessarily have the same beliefs when it comes to freedom of speech or any freedom of expression. So, and for a couple of different reasons. But the other thing is there's also a greater degree of risk because of the lack of transparency when it comes to their accounting practices. And the fact that the accounting practices are just different, the way they value things. I thought that the way NEO is doing things is actually really good in terms of how we're able to view their financials. And I actually like some of the added things that they put in there, like their vehicle margin calculation I think it's very interesting. So, So U.S. has worse GDP metrics than China. Do you think the premiums could reverse? So I think that the U.S. has worse GDP metrics than China right now, simply because China has so much more room to grow, right? Their middle class of 300 million or so is not the same middle class that we have in the U.S. It's a middle class that has a lot less buying power than ours does. So in terms of getting folks up to a standard of living that's say equal to the United States or even Europe or Japan or something like that, they have a lot further to go in that respect. And I expect if they are growing, that their GDP is going to be growing faster than the US's. And I expect that if their GDP declines, it's going to decline faster than ours would. They're just going to have more extreme swings until income is more widely distributed in their population. Let me see here. Which EV company do you think will get to full autonomy first? And more importantly, who do you think will get to robotaxis first? I still think so. I read an interesting paper recently that was written by a computer scientist, and I downloaded it from JSTOR. I don't know if you guys have access to JSTOR, but you can go to myjstore.org, sign up for a free account, and I think you can download up to 6 PDFs per month. And this is all like academic, this stuff that's published in academic journals. The other thing you can do that you may not realize, if you do a search for academic paper, and I do this all the time because I'm a giant nerd, but if you do a search for academic papers and it turns out that it's behind a paywall, you can just email the author, and 9 times out of 10, they're happy just to send you a copy of it. They don't want you to pay $1,000 a year for a subscription to Science. They don't want you to pay for, and they don't have any restrictions on who they send it to. They publish it in Science, they published it in Nature, they published it in the Journal of American Medicine or whatever. But if you just email that professor directly who wrote that, they're happy to send you that. A lot of times it's just like, hey, do you have a background in science? I'm like, no, I just thought your article was interesting. It's behind a paywall. You send it to me, they'll just send it to you. And so I've done that for a couple of things. And one of those was recently this paper that I was reading where one of these leading computer scientists does not believe that level 5 autonomy is possible. So I don't necessarily know that I agree with him, and I don't know that I'm even qualified to disagree with him. Maybe I just don't want to agree with him. But I think if any company is going to do it, it's going to be Tesla first. And it's going to be Tesla because they have the best and the most amount of they have the best data collection around. They've been working on this for the longest, and they've been stealing the best talent out there too. That's one of the things that folks don't realize about Tesla is they've been taking the best talent from everyone out there. So I think Tesla is going to be the first at both of those. Even though a couple of other, see, have you checked out Amazon's Zoom to self-driving vehicle? I have not. There's a lot about Amazon that I haven't checked out yet. Any thoughts on Jeremy Grantham saying the next crash will rival the worst crashes of all time? He thinks that U.S. growth stocks at most risk and prefers emerging market value and slow growth. So there's a couple of different reasons to prefer emerging market anyway, right? We've entered a period, at least for the last 20, 25 years or so, we've really entered a period of I know a lot of people are going to disagree with this, but we've entered a period of global economic stability to some degree when it comes to emerging markets. They used to be a lot more volatile than they are today. Politically, they used to be more volatile. In terms of conflict, they used to be a lot more volatile. We're entering really an age of global opportunity when it comes to building out so one of the reasons I'm very optimistic about U.S.-China relationship is at this point, we can't do without each other. They can't do without us, and we can't do without them. And countries that do business together are just far less likely to have actual conflicts with each other. We tend to work things out at the negotiating table. The way they negotiate is not well understood by the American public. And it really wasn't understood by our last president, who got handily out-negotiated by the Chinese at the table. And he didn't realize that they're not a democracy. They don't have constituents to please, and they can negotiate in a manner that benefits, that they can outweigh any president that we have, right? And that's one of the things that I think that's been lost on a couple of administrations. We have to offer them a deal that they see being beneficial for generations rather than just through through one administration, because they're not a democracy. They don't worry about one administration. But yeah, so I'm thinking that emerging markets, for a number of different reasons, you don't really classify China anymore as an emerging market, but places like Vietnam, Thailand, Indonesia, India to a degree is still a developing economy. But I'm actually really, and Turkey are a couple of places that I'm actually pretty optimistic on, because the potential for conflict has declined so much in those countries in the last 20 years or so, that I really think that they're finally going to sort of bring themselves fully engaged into the international economy. So our X Positive says, I'm invested heavily in drone Chinese companies like EH Co. I only lost part of my profits. I'm thinking to get out. What do you think? So I'm a little bit less bullish on all of those Chinese drone companies than a lot of people think. And here's the other thing: a lot of those drone companies actually are pretty closely tied to the U.S. or to the Chinese military. And I think that at some point in the future, they may actually be delisted. And if you look at the way Livox structured their deal with Xpeng, Livox is the company that's providing all the LiDAR for Xpeng. If you look at the way that deal was structured and that company was created, it looks like it was just done to avoid criticism of being tied to DJI, which DJI is known to be a company that's controlled by the Chinese military. And this company, Liveox, was actually started in DJI's like business incubation program. So I do think that investing in a lot of Chinese drone companies might be a little bit risky. It's not all that well known, although it should be. That the largest producer of drones in the United States has got to be Lockheed. I don't know that for a fact, but it's got to be Lockheed at this point. And I was just last year they were. I don't know if they still are, but they were last year the largest producer of drones. I think that's probably a safer bet than investing in a drone company in China, because for a couple of different reasons. Number one, the risk of delisting, because it's connected to the Chinese military. But two, there's just a lot of political risk out there as well. So, Kingston James says Elon has estimated level 5 for years and we still don't have it. Yeah, but he's saying it's going to be out by June now, or at least full self-driving is going to be out by June. Is Dogecoin for real to stay? It was trading at 8 thousandths of a dollar 1.5 months ago. And I don't know if it's real or not. Elon can move markets with a tweet, so I don't know if it's real or not. And there's going to be a lot of cryptocurrencies that fail, a lot, and it's just because there's only room for a few. I think that unlike any other business, there's only room for a few cryptocurrencies to succeed. Let me see here. What do you think about Ozon, the Russian Amazon, just like Jumia, the African Amazon? Actually, I don't know that one. And I'm glad you're bringing these things up, Axbosso. I've never actually seen you comment on my channel before, and you've already asked 2 questions that I really liked. And you brought up Jumia and this Ozon Russian Amazon. So, that's not something that I've looked at. So, I'm going back here. Andre Borgia says NP, rare earth, and lithium. So miner is actually pretty hard to invest in. A lot of times we don't really, as investors, you don't really understand the quality of the claims that they own, the quality of the claims that they're mining. And that's one of the things, a lot of times what they think they have doesn't really pan out. With rare earth minerals, a year ago, I would have said that's far less important than I can say today, especially with almost all your vehicles. A lot of your vehicles going away from the induction motor, and even Tesla going to permanent magnet motors. I do think that rare earths are a little bit more important than they were before. I think we'll actually get off of the rare earth kick. Rare earths are not as rare as the name would have you assume. Okay, they're actually a lot more common than people think. And lithium, of course, is not a rare earth metal. Nothing that's used in EV batteries today is considered a rare earth metal. If you look, rare earth metals or rare earth minerals or a distinct set of 17 different elements on the periodic table. Lithium, cobalt, and manganese, none of those are on that rare earth list. And like I said, rare earths actually aren't even as rare as, say, precious metals. But they do occur in areas that are politically problematic. And I do think that we'll probably end up finding solutions outside of what we have right now, just because of that control that certain countries could have over the supply of rares. When it comes to lithium, though, lithium is everywhere. Lithium is an extremely highly reactive metal, so it doesn't occur in its like natural pure state anywhere. It has to be separated from whatever it's in. A lot of what we get right now comes from lithium brine pools, but there's actually even ways to separate it from seawater. Which we may end up doing at some point. Once our solar and renewable energy capacity gets large enough to do that, we'll probably end up doing that. But there are other things too. It may not even be lithium batteries that end up dominating the world here pretty soon. Like there's potassium ion batteries, which I've never done a video on potassium ion batteries. I haven't really studied the capabilities here, but they're actually, in terms of energy density, it's in between lithium and sodium, right? So it's sodium ion batteries, potassium ion batteries, and then lithium. So the sodium ion batteries show a lot of promise, especially for lower energy density applications like watches, cell phones, that sort of thing, and maybe even car batteries. It's definitely possible that sodium ion batteries could have energy densities that lithium-ion batteries have today at some point. That's definitely possible. So I'm actually thinking that a lithium miner now is probably a good investment. 20 years from now, I think that battery chemistry is going to be a lot more diversified. I think especially when it comes to grid storage, it's not going to be lithium-ion batteries that win the day in grid storage. It's going to be something else. It's probably going to be sodium-ion batteries, like vanadium flow batteries, something like that, where your highest energy densities aren't necessarily the concern. It's storing energy the cheapest. That's the concern. So I think that in the future, you'll probably see your lithium-ion batteries reserved for your highest density applications like electric vehicles and electric airplanes, if we ever get to that point. Which at this point, I'm certain that in my lifetime we're going to see electric airplanes. But yeah. See, Doug B says Market Watch and Financial Times are requiring subscriptions now. It's not nice. I've just started skipping the articles and trying to read them. Actually, in my Patreon group, that's one of the things that I use my Patreon funds for, is to pay for access to those premium news sources like Market Watch and Barron's and things like that. So, yeah, those are the things that I use. We see here, man, futures are going bananas. What do you think is causing this volatility? Actually, before we got on the channel, I don't know where futures are now. Before we got on the channel, futures were up 200. Dow futures are up like 200 points. I think it has everything to do with stimulus. The Congress or the Senate signed the stimulus bill into law, I think last night or something like that. I'm losing track of days here, guys. I spent all day working on my boat. I'm surprised there's actually not sawdust in my hair on this, but yeah. So I started building a boat years ago. I've been working on it off and on. I'm actually getting to the point where it's almost finished. But okay, yeah. No bananas, like down, big red. Okay, yeah, it was up pretty big when I was there. So it doesn't say that much. We have no idea what's going to happen tomorrow. Like I said, I know somebody who built an entire trading strategy around Dow futures and buying the inverse ETFs and failed miserably doing that. So, and like I said, that's not a scientific study, but I would bet that Dow futures aren't as good of an indication of what the market's going to do by the close of the next day as you would think. So Karim Abdel Khalek says, thanks for your videos. One of the few honest YouTubers that are not looking to get clicks and likes through hypes. On behalf of all this here, thank you so much for sharing your experience. Thank you. Like I said, I just can't do that. I don't understand how people can do that. Be the hype things that they either they know they aren't true, or they don't know that they can't be true. And I just can't do that, guys. Like I'm one of those things that likes to consider all possibilities. You rarely get these like bold predictions from me. But I did make one bold prediction last Friday, which was that Thursday rather, that we'd probably reached the bottom of the market in terms of that tech correction. And I think they probably have. But yeah. Anyway, guys, it's getting close to dinner time now, and I want to go have dinner with my family. I know that my daughter's walked up and down the stairs a couple of times, so she probably wants me to come down and eat. And I want to say thank you guys for tuning in to my live stream. And I really like doing these live streams. It's not easy for me to do. I'm not all that comfortable being on camera. But thank you so much, and I look forward to hearing you guys next time. And please consider signing up for my Patreon. I would really appreciate that. And how do you see online gambling and sports betting growing and competing? Hey, I'm actually going to be doing videos on that pretty soon, and that's actually a huge topic of conversation in the Patreon group, the Portfolio Manager group. But anyway, guys, thank you very much. Good night, and I will see you next time.